Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Tuesday, September 6th, and we've had a very strong sell-off today. It is really the first trading day after the weekend because Monday was a public holiday here in the US. It was Labor Day, and you can see this is Monday's chart. We had that early close at noon, not really a close, but rather the market goes into a shutdown until 5 p.m. But market was basically in a kind of a tight range, basically between 39.39 and 39.20 more or less, 20-point range, basically going nowhere. I remember on Friday was the non-farm payrolls, right? We had that initial rally, then the big sell-off. Okay, so we're just basically holding the last hour of trade on Friday, that range. And today market overnight was putting in a nice move up, right? It made 1, 2, 3 new highs, and then cash opened and sold off. And what was interesting was the delta, right? I'm coming back to delta, right? I talked about delta yesterday on how I was, I'll say triggered, but that's such a woke term, but it's I say that tongue in cheek, where somebody was saying, oh, I don't know anybody that uses order flow delta effectively. Well, okay, maybe you need to widen up your range of people that you speak to on a daily basis, because what I'm about to show you is very revealing in the delta, right? I mean, it was like a sign from above almost. And 8:30 Chicago time, cash opens. It is the busiest time of the day in terms of volume until the cash close, which would be generally the busiest time of the day, and especially since Monday was a holiday. So everybody that's been waiting for the cash market to open since the close of Friday, they had to wait an extra day, just because even though futures were open, it wasn't a normal cash session to trade. So when you're looking at the open, the cash open, normally that's when your heavy volume is going to appear. And what you're seeing in the 5 minutes leading up to the cash open was very foreshadowing of what could potentially come during the cash session. And what you started seeing was very heavy selling 5 minutes prior to the cash open. Excuse me. This bar here, big negative delta, minus 1300. Next bar, minus 588, minus 1294, minus 766, minus 1454. And then cash open, and we got a nice green bar up, right? So in this one green bar, we pretty much recovered everything back up to where we were when the selling started, right at the 39.43, and then the selling continues. So when I was working at JP Morgan, right, we would get orders from New York. They'd pass us the book to execute orders, because being in Asia, you've got a lot of different futures markets out there, right? Or in cash markets, you'd have Hong Kong. Japan was handled by the Japan desk in Japan. We had Hong Kong with the Hang Seng, Korea that we would deal with, Taiwan index, right? Even the Singapore Nifty on SGX, and obviously the Singapore Nikkei. And a lot of times, depending on the size of the order, the PM would give instructions start before the cash open, right? To sort of minimize the impact that the order is going to have. So when I see this come in right before the cash open, it's giving me a sign, sitting here as a retail trader looking at the order flow, that this book today is really slanted to the sell side. Because why am I getting all this selling coming in before the cash open? Why aren't they waiting for the cash open? Because they probably got more selling to do once the cash opens. They're trying to feed it into the market, get some done. You're talking, look at this volume, 3,000, 2,500, 2,500, 3,000. So that's already 10,000 plus another 4,000. So close to 15,000 contracts are trading in the 5 minutes before the cash open, right? That is cash session volume already. So people are already coming in selling, right? They're getting a head start on their selling because they know that they got a lot of selling to do. The market's going to be under pressure all day. And the interesting thing was, if you're watching cumulative delta, it went from positive to negative, obviously pretty quick, because the cumulative delta is small, overnight relative to what you're going to see during the day. But it went from, this bar here, plus 4,700 to minus 3,400, 2827, 1500, 767 to negative right when the cash opens. Now, if you're looking at a chart like this, it might be a little bit hard to get your head around the numbers if you're not used to them. That's why I suggest looking at something like, a delta candles, on, different software providers call them different things. But if you get the delta numbers put in, a candle format, sometimes it's a lot easier to see. And if you're looking at the bottom one here is cumulative delta, I could just see cumulative delta dropping from 4,000 to 3,000 to 2,000 to 1,000 to going negative, crossing the zero line here. I mean, that's pretty obvious. Anytime cumulative delta crosses the zero line, you obviously know something's underway. But to be honest, that's a bit of a lagging indicator. You don't want to be waiting all day until cumulative delta crosses the zero line, because if, say, cumulative delta is minus 10,000 for the day at 11 o'clock, and by 1:30 it reaches zero, well, that means you already had a big move up, right? So don't get too excited that, hey, it's crossed the zero line. But once you see it cross the zero line, either positive or negative, that there's a move already underway. Okay, but if you're looking at the actual individual deltas, you're seeing these small deltas coming in here, right? 393 is the biggest delta, positive or negative, but everything else is pretty small. See the small candles, the numbers, the biggest number here is 132, you got 123 here, everything else is double digits or even single digits, 11, 14, 17, 44, 26, and then boom, minus 1,300. Where'd that come from? Okay, well, maybe it's just a one-off big order. Oh, another 588. Okay, 588, even without this 1,300, 588 would be considered big. And then 1,200, right? Then another 766. And these bars are just under pressure the entire time. You can see the max deltas 0, 19, 0, 20, 0. Okay, so you know that there's strong selling already. Cash market opens up. Everyone that's had orders, sitting on the, ready to be executed, the algos to fire off, since, obviously, it was a big down day on Friday. Cash market finally opens up on Tuesday. There is going to be some buying, people that are, have a chance to buy, the first time they had all weekend to look at their charts and say, hey, maybe I should buy something. So I'm not surprised to see a bit of a jump. And then the big selling comes in again, minus 1,000 delta, minus 1,200. Even if there is buying here and selling, these are pretty evenly matched until the big sell orders hit the market here. And the market, sells off quite nicely, just methodically, making new low, making new low, making new low. You get some big pushes here, minus 1,000, minus 2,000, minus 1,400, keep going down. Okay, so that's one way you could use delta, right? And it's just something that you could have on your chart that you could use. And this other thing that I like, after we had this rally here, this little intraday rally, what was the sign, right? You don't want to be buying on a market that's selling off voraciously, because you're going to get your head handed to you. But if you're watching the delta, you can see it just flip right in here. Minus 655 ends up plus 34. So it went from minus 600 to positive 34. Got a nice little rally here. Okay. And then something similar here, right? The opposite. Big 6 plus 660 max delta, closed at minus 86. That's bearish, but then it flipped again. Right, minus 544, closed at only minus 68, and boom, went higher. Okay, so delta's a fabulous tool. You should be adding it into your trading if you're not already doing it. I could even talk about all these buying imbalances, right, coming in. Let's put on a regular chart here. It's a little bit easier to see at the time, but you can take advantage of all these imbalances that are coming in. I mean, look at this bar here. It's just littered with buying imbalances, right? When you see things like that, you know that the aggressive traders are in the market, and that's the way that you should be looking to trade against, right? I mean, you can get short in the face of all this aggressive buying. So, again, take the pieces of order flow, use them in your trading, and eventually it's just going to benefit you, right? You're going to be a much better trader, and you're going to have better results, right? You're not going to find yourself swimming against the stream trying to make heads or tails of what's happening in the market, because you'll be trading on the right side of the market. So if you like this video, be sure to like it and subscribe to my channel, so anytime I post a new video on order flow, you'll get a notification. So again, everyone, thanks for taking the time out to watch this video, and happy trading. Bye-bye.